Hello ladies and gentlemen, welcome back to another episode on this public investment playlist series. If you follow this channel for quite some time, you know what this playlist is all about. Each month I contribute to this public investment portfolio. I started from scratch, from zero, back in January of 2022, and each month I log on and make this YouTube video showcasing what is the performance of the portfolio right now. Sometimes you will see these videos and my portfolio is in the green, other times it will be in the red. In the long term, I'm using these as a time capsule so that in a few years I can look back and understand, oh, I was in this stage of my life, right now in Lisbon in this room, I thought this company was going to be big, maybe that company went bankrupt, or maybe I did a really good decision and right now it's carrying my portfolio. This is all fun, remember, it's not investment advice. I do me, you do you. Just because I think something might be a good decision, it not necessarily might be the best one for you. We are all in different situations, we all have different risk appetites, and having that said, let's get straight into the video. I will open the Trading 212 app, which is the platform or the brokerage that I'm using to make these videos. And as you can see, the total value of a portfolio right now is 4,430 euros with a return of 36%. So if I were to retire today, and remember we have a really long-term horizon scope for this portfolio, I am each month dollar cost averaging, so I'm contributing monthly to this portfolio, not selling any of my stocks, so that in a few years that this can work almost as a second retirement for me. Right now the performance is at 36%, so out of these 4,400 bucks, 1,174 is pure gain. So if I were to sell all my stocks today and I would liquidate this portfolio, I would have an amazing return. Of course, on these I would still have to pay taxes, but it's a really good month in a way. If you know me, this is actually a bad month, because this means all the stocks that I've been buying right now, they are more expensive than they were in the past. So it's a bit counterintuitive, but these are the hardest months for me to invest, but I'm sticking to the strategy where I have to contribute every single month. If we put this in a compound calculator so that you have more or less a notion, of course this kind of return is completely unrealistic, but if I were to maintain these 4,400 bucks and I would continue to contribute 250 euros per month. Of course, if you follow this channel, you know that in the beginning I was only contributing 40 euros, then I started contributing 80 euros per month, then 100, 120, and right now it's 150. And as my career evolved, hopefully as will my salary, so I'll be able to contribute more to this portfolio, or not. Maybe I get married, maybe I need to buy a house, maybe I have another health expense or something that I was not counting. But at the end of the day, this is something to make my life better and not worse, so I'm putting to the side money that I don't need right now. Right now it's 150, so let's assume that everything is going to remain constant. If I keep this for 16 years and I have the interest rate of 36% annually, which is absolutely absurd, but I would be actually a millionaire in 16 years. And if I would postpone this to 38 years, I would actually be a billionaire, well, an American billionaire. And well, maybe this is not for me, but maybe for my kid or grandchild, so maybe they will be able to amount to this net worth. But more realistically, the return should be more or less around the market average, which still would amount to almost 1 million euros in more or less 38 years. Of course, this is going to depend on the performance of this portfolio, and a lot of things can fluctuate, but it's always good to have this in mind, especially when we're focusing on the long term. Without any further ado, let's open the Trading 212 portfolio, see what kind of stocks are carrying the portfolio right now and which ones are dragging us down. If you follow previous episodes, you know that I've been investing mostly on US stocks, and I also have a portion of my portfolio in Chinese stocks, which mainly for the past months or even the past 2 years have been dragging my portfolio to the mud in a way. But right now the interest rates in China were dropped and the Chinese stocks are actually rebounding. Maybe this will be temporary, maybe this will maintain. I can't really know, I cannot predict the future, and as I'm always stating, this is not any kind of financial advice, but it's nice to see, because in the past months I was investing and they were always getting lower, so it's a bit difficult to go against the crowd, but right now these are the ones that are actually pulling the portfolio back to tops. You can see straight off the veg Alibaba with a return so far of 29%. Let me see the other one, JD.com at 41%. Let me see others, Tencent 31%, and Pinduoduo at 70%, although these are not relevant positions. We have Google on the second place with 47%, Amazon at 93%, and the bulk of my portfolio is actually the ETFs. If you can see here by weight, you can see that 26% is going to the QDVE, that's the ticker symbol for the ETF that I'm investing, is the information technology sector 1. So this is almost a quarter or more than a quarter of my portfolio. Then I have the S&P 500 ETF, so this is mimicking the performance of the 500 biggest companies in the US, or the index S&P 500. Then JD.com, because it appreciated so much right now, is my third largest position on the portfolio. And on the fourth we have already another ETF, and this is the broader one. So this has roughly 3,000 stocks, give or take. So if you sum the first, second and fourth positions, you will see that I have over 50% of my portfolio is distributed in ETF, which means it's a basket of multiple stocks. And then I have my individual picks. Some are doing good, others are not doing so great, and you can see here how the weights are being distributed. Of course, in each episode this will change a bit, and in the past we already have positions that we got a bad return. You can see here Farfetch. I'm always saying this is example, but yeah, this company essentially went bankrupt, so I lost all of my investment on this stock. But still, our performance is at 36% because it was such a small fraction of my portfolio. And this is something you need to have into consideration. Of course, if I had invested all my money, let's say, on Pinduoduo, I would be having a performance of 70%. But every person needs to measure their own risk tolerance and see what best fits to you. So, let's see the pies that we've been creating throughout the past months. In January of 2022, we started the portfolio with $40. And if I had invested all my money, I would be more or less on the same performance as I am doing right now, 35%. But if I had invested all my money in January of 2022, my performance would be at 51%, which is really nice. In some episodes you'll see this in the red, other episodes you'll see this in the green. Right now we are in a really good performance, and it's funny because now for me it's the worst timing for me to be investing, because if everything is so the prices are so high, it's gonna be difficult for me to have these kind of returns or not. It's very difficult to predict the future, but it's when the things are in the red that normally you can find a better value for the positions that you're doing. But funny enough, is always also the time where people don't want to be investing their money. But this is something, hopefully, and throughout this series you will see me rumbling about, and you can see here, well, we had some months that are extremely good. I don't know what I invested in December of 2022, let's check it. So, okay, Google, Amazon is really good, and Meta Platforms okay with a performance of almost 400%. So if I had invested all my money in Meta back in December 22, we would be trading in a really good position. And let's fast forward for the past 2 months. In the past month, if I remember correctly, stocks were dropping really heavily, and I still decided to contribute on the portfolio. And right now we are already up 19% from 1 month, which is absolutely absurd in my mind. Let's open the portfolio that I built up for this month. So we are contributing 30%, and this is because I don't have that much time to be researching about new companies. And I'll be investing into these information technology ETFs, 30%, so it's a big chunk. Then you have another ETF, the iShares S&P 500, 15%, and then Vanguard, all world 5%. So 50% of my investment or my monthly contribution is going to ETFs. And then the other ones are split by Disney, which right now is below $100, and I think right now it's a good decision to add that to my position. Google, which recently is going through some lawsuits, but I think the company will rebound on top of this, so I'm also kind of trying to leverage on that. Nike 10%, and then I'm going to have a small allocation to Intel, which has been really hitting my portfolio, but it's just 5%. And ASML, which recently they had a mistake in reporting their earnings, and the stock kind of dropped, took a nosedive, and it's a good way for me to get exposure to another company in the portfolio. So from historical performance, this is giving more or less an average annual return of 14%. I know it doesn't look as great as the 36, but this is actually really good. If we could somehow maintain 13%, I would be completely happy. You will not hear me complain financially, because even though I would be only contributing 150 euros per month, I could really be comfortable, hopefully, when I was in retirement with this kind of performance. But then again, take this with a grain of salt, because these kind of numbers are unrealistic. So we are going to invest, and most of it will not execute. Because the New York Stock Exchange is not open right now. I'm using right now a small break while I'm preparing my lunch today, and I still need to go back to work. But I always like to do this 10 minutes break instead of drinking a coffee or a smoke, which I don't do to make these videos. Is always nice. And you can see here the allocation of the 150 euros. And if you manage to stick with this series, or if you accompany some of these episodes, you will see that hopefully this monthly contribution will change throughout the time. When I started this portfolio, 40 euros was a lot for me to be contributing, or kinda it was the only amount I could contribute. Right now I can contribute 150, and hopefully in a few years I'll be able to contribute more, or I don't know, life circumstances changes. But I always want to keep remaining doing this dollar cost average each month in, each month out, contributing to this portfolio, and see the net worth growing itself. Because if I leave everything on savings, and I feel like especially in this age, you kind of need to balance out enjoying life but also building your future. And I'll try to, these videos are a good way to also commit to this. So right now the portfolio is at 4,580 euros. So some of the positions have executed. So 38% of it has executed, and this is all naturally going to drop the performance, because I'm just investing right now in the market. So the pie right now has a 0% performance, and also if the contributions get heavier, that will also impact the performance overall of the portfolio. Without any more delays, thank you all for watching, and I'll see you next time. Bye.